India, unfortunately, exports have not done too well. In the June numbers that you've seen, other than a couple of sectors, particularly electronics, which are the mobile phones and some of the other electrical equipment, demand and supply balance for crude, overall crude oil across the world, that's likely to remain very balanced. So that will help to keep oil prices down. But other than that, again, we need to see how the entire global trade and global growth prospects play out.
Hello and welcome to TS Talks. Today we have with us eminent economist and RBI MPC member Saugata Bhattacharya with us. Thank you, Saugata. Thank you for your time.
Great to be on your show. Nova, thank you for having me.
Saugata, a lot has been spoken about the tariff and the trade uncertainty following Trump's announcement of reciprocal tariffs, sectoral tariffs, and so on and so forth. Of course, the tariff uncertainty is affecting Indian economy. But at the same time, if you see the trade data, the figures are not exactly disappointing. Exports have actually gone up. And exports to the US is also up. Now, how do you really read the situation?
So actually, you are completely right about the uncertainty. We have no idea how the ultimate configuration of tariffs across different countries, tariffs with the US across different countries are actually likely to play out. On the export front, there is something that we have seen. So let me preface our comments on India's exports by saying that most producers, manufacturers, and other producers have tried to front load their exports to the US to try to escape any particular tariff structure that might come in. So you've seen this in China, you've seen this in other countries, etc. So exports have risen to the US. It's beginning to come down. On India, unfortunately, exports have not done too well. In the June numbers that you've seen, other than a couple of sectors, particularly electronics, which are the mobile phones and some of the other electrical equipment, the other main exports have actually been either flat or have contracted. In particular, I refer to engineering goods, which is the largest segment of our exports. So, which includes automobiles, auto parts, etc., which is part of the engineering goods. That's only expanded in June by low single digits, and then over April to June again in single digits. So hasn't done well. Pharma is another area that has again expanded a little bit, but not too much. So the only standout segment that we have seen is the electronic segment. We need to understand, of course, for the petroleum, gems and jewelry, and other sectors, that's of course dependent on prices. Prices of oil products, petroleum products, etc., have fallen. So that probably accounts for the drop in the value of those exports. But other than that, we are already beginning to see some impact. Other than that, front loaded a few months in the beginning of the year, when exports were beginning to be front loaded to try to escape tariffs. It looks to me, although we are waiting for how trends develop, but it does seem to me as if our export engine is beginning to weaken, which is a cause for concern. But this needs a few more months of data to be able to understand the trends.
And also the BTA, of course, the Indian side and also the US side, both are trying hard to come to a conclusion, conclude the negotiations, but nothing really has happened so far. And we do not know exactly when the BTA is going to be signed. We'll obviously have to wait and watch to see how things pan out. Uh, Shogato, my question to you is the US economy is slowing down. How do you think this is really going to impact India or even other countries? Because US slowing down would also mean that the world economy or Indian economy is going to be impacted. How do you read the situation?
So, it is going to impact all the indications, forecasts that I've seen seem to suggest that the US economy, which is the largest consumption economy in the world, the entire US economy is $30 trillion, of which two-thirds, it's a very large consumption-driven economy. So if the US economy slows, their consumption slows, this will definitely have severe impacts. So the first impact is likely to be the direct impacts that we are seeing in terms of Indian exports to the US. But even more than that, more severe than that, to my mind, likely to be the indirect impacts, because I mean exports to other countries which export to the US, which potentially can slow, given a slowing US economy. So both the direct and the indirect impacts of a US slowdown are likely to be significant. I mean, again, this depends on what kind of tariffs are finally imposed across the various major trading blocks in the system. But assuming a 10% base tariff and some other tariffs, I mean, the US-Indonesia trade deal, for instance, as you know, might be replicated across various other geographies. And I'm more worried about not just the US slowdown, but the tariffs that we are now told a 100% tariff on pharma starting from 1st August, in addition to the 50% tariff on steel, aluminum, copper, etc. So all of that. So I think those are fairly large tariffs, and how those are likely to work their way through the systems is
It's
still
something
not
we need
clear.
to wait and watch.
Now, stepping a little away from tariff and Trump, let's talk about the domestic economy. Rural consumption has sort of outpaced urban consumption. There has been a sort of slowdown in urban consumption, but at the same time, rural consumption, rural economy is doing pretty well. Now, while this is a positive development, it is something that the policymakers will be pretty happy about. But the slowdown in urban consumption, how would that really impact the economy? What do you have to say about this?
So again, remember that the rural urban consumption stories in India are to a certain extent derived estimates from various secondary, tertiary indicators. Rural wages is cited to be one of the major indicators which indicate rural consumption. And we use the corporate India's, the listed companies' numbers on salaries, growth in salaries, as one indirect indicator of urban consumption. I'm sure the story is more complicated than that. But assuming that that narrative is correct, and we know for a certain fact that rural consumption from the HCES surveys, the household consumption expenditure surveys, is almost as large as the urban consumption. So that is good news, that if rural consumption actually improves. And given the fact that our rains are forecast to be good, reservoir levels are supposed to be good, that's a good sign for overall rural demand. But there are two other factors on the rural side which is a cause for worry. One, the good news is that rural inflation, which had been fairly high in 2024-25, is beginning to come down, has already come off significantly. But the other side is that the terms of trade from the rural, so what farmers can earn via higher prices of agricultural produce, that too has begun to come down. So I don't know how the interplay works. Government expenditures in the rural areas, growth in government expenditures, that has begun to come down. But on the urban side, which is as big as the rural consumption numbers, the problem is that salaries, which is again an indirect number based on the growth of salaries and wages from the listed companies, that has remained flat. I'm still waiting to see if there's some improvement in the Q2 numbers for this year. But these are things that need some analysis. What kind of impacts the growth of GCCs, the Global Consumer Centers, can make in this entire thing is something that we need to see. But I mean, I definitely, you are correct that I mean this needs some policy intervention across various policy things, fiscal, industrial, manufacturing, etc. So this does need policy intervention.
Now, Shogato, you spoke about inflation. You said inflation, of course, has been coming down. That's something, again, something to be happy about, to cheer about. We're also hoping for a normal monsoon. Do you see this trend continuing?
In the immediate future, yes, you're absolutely right that inflation is likely to remain moderate. But the last inflation print, the June print of 2.1%, I think that's an outlier. That was caused, one, by the base effect of the very high inflation of June last year, 2024. But beyond that, it's likely to the numbers, the base impact the base effects will begin to moderate, and so that will begin to push inflation up. What I mean, having let me make clear that I do think that inflation, overall headline CPI inflation, is likely to remain very manageable in the near term.
That's
But
good
having
news.
said that, yes. But having said that, I think we have reached the bottom. Inflation seems to have bottomed out. After that, it will begin to rise gradually. If you look at the RBI's forecast in the last policy meeting, the Q4 numbers were projected at 4.4%. So typically, I mean, the 2.9%, which of course will come down now, will begin to bottom out. Will have bottomed out in the first quarter. Beyond that, is likely to rise. I think the trend will remain the same. Whether the levels, the overall average 3.7% is widely expected to be brought down. But other than that, the trend, so the bottom in the first quarter, after that is steady rise, slow but steady rise in inflation over the next 3 quarters. I think that is a given. The overall levels we still need to see how that goes now.
Of course, the other factor is the global crude oil prices. Now, we saw it rising significantly during the short span when Israel and Iran were at war. Now, thankfully, that has sort of come down. The prices have come under control. How do you read the price situation in terms of global crude oil, and do you see it staying at the level that it is today?
So again, I mean, coming back to your last question, I think this is one of the reasons that we think that inflation in India is likely to remain moderate. The prices of metals, industrial metals, the prices of crude, etc., likely to remain well in control. I don't think, I mean, given the expectations that we talked about before of a US slowdown, your question, I think overall aggregate demand across the world is likely to remain relatively moderate. So that will keep the prices of both industrial metals as well as crude. Crude, of course, has its own supply and demand dynamics. The recent the forecast reduction in cuts by the OPEC plus countries, so that means increased supply into the market, that is likely to remain very balanced. So the demand and supply balance for crude, overall crude oil across the world, that's likely to remain very balanced. So that will help to keep oil prices down. But other than that, again, we need to see how that entire global trade and global growth prospects play out. What kind of role China's potential stimulus measures to increase China's growth might begin to play out, what effect that will have on industrial metals prices, and that will invariably have an impact on crude. So overall, I don't think geopolitical concerns will be a major one. There might be brief spikes here and there, but the overall demand and supply dynamics of crude oil across the world, OPEC plus, the US, other major crude producing countries, that is likely to keep supply keep the crude market oversupplied in the near term. So hopefully, crude prices are likely to remain moderate in the rest of the year.
And this is again, Saugata, something that will make India's policymakers a little happy, pretty comfortable. But overall, if I may ask you, what are the challenges, the immediate challenges that the Indian economy faces today? What are the concerns?
So concern, of course, is growth. I still go with the RBI's forecast of 6.5% growth for FY26, which I think, I mean, given a few basis points here and there, is likely to be the outcome for India in FY26. But more than that, I think our growth needs to increase. The growth rate from 6.5, we need to go towards 7.5%. For which I think multiple policy measures, regulatory measures, other measures need to be put in place. The government has already started doing this with the tax cuts, as you know. So that will potentially increase aggregate demand over the rest of the year. But together with that, many other regulatory ease of business, other concerns, I think needs to be done. The inflation will give policymakers across the policy spectrum room for putting in place measures without fear of the economy overheating. So I think inflation is likely to remain moderate. So that will give room for other policymakers to put in place interlocking policies, integrated policies that is likely to shift the growth trajectory upwards.
Thank you, Saugata. Thank you for your time. It was great talking to you.
Pleasure, privilege.
Thank you so much. See you soon.